My name is Stephen Goakes. I'm the Managing Director of Natgen Group, and I'm here to talk to you today about our Natgen Investment Trust's CA25. The asset for CA25 is a Coles anchored shopping centre in the town of Cooma at the gateway to the Snowy Mountains in New South Wales. As a supermarket anchored shopping centre with a dozen odd specialty tenants, those that know Natgen will know that it aligns with our investment philosophy closely, as we have a number of similar assets within our portfolio. What we look for in these type of assets is basically, which we call regional convenience retail by the way, is assets that provide good income levels through all types of economic activity. So basically low elasticity of demand type tenants, which are typically food, liquor and services style tenants, where people still need those goods and services no matter what the economic conditions are. The centre consists of a large Coles supermarket and an enclosed mall style shopping centre which faces onto the main street of Cooma and also back onto a street behind. It also contains a very substantial number of car parks, including a big undercover underground car park, which is great for that part of the nation. The tenant mix of the centre is mainly retail, but there are also a couple of office tenants within the complex. 73% of the income from the property is derived from ASX listed tenants, and you'd say over 90% of the property income is provided by well-known sort of high street or national chain style tenants. Coles have been in the centre for over 20 years so far and have another 6 years to run on their lease. At that sort of time we start looking at what's going to happen to the major tenant at the end of that time. And this is similar to all our shopping centres, where we look to make sure that the anchor tenant is going to stay in place. At the moment we have a situation where replacing the floor space of supermarkets is going to be very difficult for the current rental state of these supermarkets. So we have a competitive advantage in being in existing assets, particularly ones such as this, which are modern but still could not be built anything like for the money that we're paying for the centre at this stage. That's a common theme for centres such as this at the moment. So we're comfortable that over the time frame of this trust and the Coles lease that they will be looking to stay within the centre, because their occupancy costs would go up substantially if they moved anywhere else, and there's really no impetus to, because they're at the centre of town in a prime location. The town of Cooma has the triumvirate of supermarkets. It's got a Coles, it's also got a competing Woolworths, and also the adjunct of an Aldi in town. So it's a very stable retail mix, and the turnover that we're seeing off the Coles is indicative of a very well performing supermarket of that size in a regional location. And there are fairly set metrics for these things which we look at to make sure that the supermarkets are performing as expected. Of course we also look at how many people are visiting the centres on given days of the week and make sure that accords with our expectations. There is a small amount of vacancy within the centre, less than 5% of the centre, and that is being covered initially by a rental guarantee from the vendor for that space. What we intend to do with that space is to look to a series of tenants that are looking to move into the town, and particularly to this centre because it is quite a preeminent centre within the town. And over the first couple of years of the trust we'll seek to reconfigure the spaces such that we can accommodate those tenants in areas that they're seeking, which is predominantly the main street frontage, which will be a place that provides the sort of access that these style tenants are looking for. The return target for the fund is 8.1% per annum net in the hands of investors. This is after all costs and fees. As always, Natgen investment trusts provide actually three types of income going forward. First of all is the cash return that is paid on a monthly basis going forward for the term of the trust. The second aspect of return is the taxation benefits which come from holding large-scale commercial property, and these include amortisation of depreciation, offer costs, and also debt costs, all of which deductible on the way through of the trust. This means that your 8% return on a yearly basis will be able to be reduced in your tax return by the aggregate of those deductions. The third basis of return from a Natgen investment trust is capital growth over the term of the trust. This is something that we don't actually specifically forecast in the future, and that's because we're talking about 5 to 6 years down the track and we're unable to accurately forecast what that is. What we can say about capital gain on a property is that the capital value of a property is very much based on the net income of that property over time, and on that basis we can safely assume that the net income is going to rise over that time. There are some factors which impact that, of course, but generally speaking that's the general point with property, that over time value rises. It's not always the case, but in the long term it certainly is. Natgen intends to borrow 50% of the purchase price from a major Australian bank. We are currently in talks with 3 of the big 4 Australian banks and a couple of second-tier banks in relation to this lending, and we'll choose the successful bank financier closer to the time of settlement of the trust. Natgen has trust assets in Queensland, New South Wales and Western Australia, and we are often asked, how do we manage assets remotely? So basically the way that occurs is that financial management is always taken care of centrally within the head office of Natgen, and then the on-the-ground management is taken care of by people within the towns where our assets are located. So that gives us a very good insight into the operational efficiencies of the property, consolidated perspective, but also has people on the ground who are known to the tenants and who can provide the day-to-day facilities and asset management services to people. Interest rates are always a topic of interest to our investors and of course to ourselves. I can't imagine there's any other topic which takes up so much of my time as considering interest rates, and that's probably true of many people. So at this stage we have forecast interest rates based on current future interest rate projections, and that includes over about a 3-year term. Again, like anything else, forecasting interest rates longer than that is fraught with difficulties. I would say that we do have opportunity to hedge our interest rates on this and other of our trusts, but in this case we're assuming that we're going to have variable interest rates going forward, but we could fix the rates over a portion or the entirety of the term, depending on what the interest rate outlook is like closer to the settlement time. An important part of an acquisition of a new asset for a Natgen investment trust is the due diligence process, and we have a long and detailed manual of all the steps we go through for due diligence. The main issues are basically ensuring an independent valuation of the asset for both bank mortgage purposes and also for our own internal purposes. We also do extensive physical due diligence on the asset through external consultants, and that deals with issues such as the heating and ventilation and air conditioning systems, the state of the roof, which is always an important issue, the structural integrity of the property, making sure that the property is actually on the site that we're purchasing, and all those day-to-day issues. And then the third thing, of course, is legal due diligence, where our lawyers go through all the legal searches that pertain to buying a property such as this. For those familiar with buying a residential property, you'd be aware of all the searches. Well, we probably do double that number of searches for a commercial property of this style. And the fourth area of due diligence is the financial due diligence, and our finance team does a rigorous basic in-house audit of the financial information that we can glean from the property from the vendor to ensure that the net income that we're expecting from the property is accurate and up to date. At Natgen, we feel we differentiate ourselves with the level of management that we provide of our properties within our portfolios. We are in essence property people, and we've all owned commercial properties personally, so we know how important it is to not only ensure that the top line, the revenue, is taken care of, but also that the expenses are carefully managed. It's basically a version of manage the pennies and the pounds will take care of themselves. So we look through every asset, and we ensure that we've got a yearly budget for all aspects of expenditure and of course revenue. Each of those budgets for each of the assets within the Natgen portfolio are signed off personally by the directors of the business, and in fact literally every single piece of expenditure within this business is signed off by Brett Nelson and myself, so there's literally nothing comes out of any of the trust account bank accounts without it being signed off personally by Brett and myself. This is a long and tedious task every month, but it ensures that we are fully across all, even the little detailed aspects of our properties, and we believe that's unique and important to unit holders. In essence, the building of wealth for our investors and our unit holders is why we are here. It's why we exist. Those familiar with Natgen will be aware that we have a series of acquisitions themes that we work on over time. So you will have heard us speaking about regional convenience retail, of which CA25 is an example of that. The other acquisition themes which we are currently following include value-added industrial. We also look for non-CBD office assets which are mispriced in the market, and also development assets as well. One that we've added recently to that collection is also specialist assets. The main category of that is medical. Over 20 years of experience of owning shopping centres has given us an insight into the types of issues that are raised in various types of centres. This Cooma Centre is very similar to two of our other assets, our shopping centre in Inverell in our IR22 trust, and the Woolworths anchored shopping centre in Collie in Western Australia for our CA24 trust. And as I said, that experience indicates the type of issues that come up in these centres, basically informs our management style for them. So we're getting a series of these centres, and it's something we're very comfortable with, both in terms of the revenue and the consistency of revenue, and also the cost structures related to them, and thus the return profile. I'd like to commend Natgen Investment Trust CA25 to you for your consideration. As always, please ensure that you read the information memorandum in its entirety and seek any external advice that you may need. Other than that, we look forward to you contacting us. Please call and speak to Caroline Seymour or another member of our team for full understanding of the investment.